Welcome to The Explainer. In the last week of October 2025, global markets were pulled in three different directions all at once. It was a whirlwind, leaving investors trying to figure out which way was up. Well, as it turns out, pretty much everything. They were the three global narratives that defined a really pivotal week for the world economy. Okay, let's dive into this. To really get a handle on the week's chaos, we've got to break it down into the three massive, interconnected stories that everyone was watching. So these were the key drivers. You had a potential trade deal, a super critical interest rate decision, and then a make or break earnings week for big tech's AI ambitions. All right, let's start with our first story, a sudden breakthrough in the US-China trade war that, really caught everyone's attention. Just before a whole new round of tariffs were set to hit, officials announced this framework agreement. It was a really significant step back from the brink. Now, what's so interesting here is the sheer scale of what was avoided. The market went from bracing for 100% tariffs to celebrating a truce. The whiplash was pretty intense. So, the deal included these crucial compromises on things like rare earth minerals and agriculture. But the real surprise element was Trump himself, tying it to NVIDIA's advanced AI chips. So, with the threat of tariffs kind of subsiding, investors then turned their attention to the U.S. Federal Reserve, hoping for another boost. And when I say hoping, I mean the market was almost certain a rate cut was coming. It was priced in with over a 98% probability. Wow. And yup, the Fed delivered just as expected. They cut rates for the second consecutive month. But the real story, the part that mattered, was in what the Fed chair said next. Powell basically poured cold water on any expectations for more cuts. He signaled some major uncertainty and even noted there were strongly differing views among the policymakers. And this brings us to our third major story, where the market's optimism was really put to the ultimate test: big tech earnings. The really crucial point here is the staggering amount of money being spent. So the big question for investors was simple: is this AI spending actually paying off? The results were a mixed bag, to say the least, and this chart brilliantly illustrates the market's core conflict, right? You've got Alphabet and Amazon soaring on strong cloud results, but then Meta and even Microsoft were punished over concerns about the colossal cost of this AI arms race. So, with these three powerful forces all colliding, a trade truce, cheaper money, and this polarized view on AI, how did markets around the globe actually react? Over in Japan, the mood was just euphoric. Fueled by all that trade optimism and the AI hype, the Nikkei completely shattered records, breaking 51,000 for the first time in its history. But in Hong Kong, the story was the exact opposite. The market there fell for a third straight day, snapping a 5-month winning streak. So why all the pessimism? Well, it was because of this number right here. It showed that China's economy was still really struggling, and that's a fact that even a trade truce couldn't just erase. India's market really captured the week's indecision perfectly. It surged to new records before ending the month with a bit of profit-taking. And back in the US, despite all the volatility, October turned out to be a month of pretty solid gains, with the tech-heavy Nasdaq leading the way. So, the crucial point is that by the end of the week, the market was just left balancing these three powerful, competing narratives, a real tug of war. And this leaves us with the central question. The tailwinds are strong, but so are the headwinds. And that really sets the stage for whatever comes next.